When you check your screen, you know what time it is, right? It is Forex trade time. Welcome back to my channel. Welcome back to Profitable Traders Hub Academy YouTube channel. And of course, if you've not subscribed to my channel yet, do well to subscribe. Turn on your notification button so you get to be notified when I drop a new content, and I promise to keep it back to back, right? Okay, so in our last class, my last video, I talked about the support and resistance. I said you buy from a support zone and you sell from a resistance. I said in an uptrend, if price makes a high, a low, higher low, right? Higher high. Now we said that the previous protected low, we call it what? 1x. And we said the old high that got broken, right, that ought to be retested or that will be retested along the line, we'll call it what? Second support. That is 2x. Now we said from 2x to 1x, that is what our support zone. We expect price to do whatsoever from here based on the point of interest price want to react to it. Please be a reactive trader and not a predictive trader. I always say this to my mentees: be a reactive trader. With that, it keeps you in check. You lose less, right? Now, in a downtrend, we say when price makes a low, a high, a lower low, right? A lower high, a lower low, right? We said this protected high becomes our what? First resistance, and we call it what? 1R. And we said the support broken that becomes the new resistance, we call it what? Our second resistance, which is named as what? 2R, isn't it? Now some person may call it R2. It's okay, but just get what we're saying. Get what we're saying. Now we said from R2 2R, as the case may be, to 1R, we said that zone entirely is what? Our resistance zone. So we expect price to do whatsoever. But today we'll be looking at the difference between break of structure, then change of character, BOS and chalk. Now, you see, this high that was protected was broken, creating what? BOS. So obviously, we've been seeing BOS, right, emanating from an uptrend, and we've been seeing that same thing in a downtrend, meaning the similarity between the uptrend and the downtrend is what? The presence of what? BOS. So what is now the break of structure we are talking about? Looking at it practically from this. Now, if I want to say anything, and I believe I'll try as much as possible to be apt. BOS, right? Break of structure is what you want to see in an uptrend or a downtrend. So the presence of a BOS is noticed when market gives a particular trend. Very simple. You want to see series of BOS. That's all. Just like we kept saying, boom, boom, boom. BOS, BOS keep happening, right? Now, change of character happens when there will be a sudden, or when there is a sudden change in the direction of the market. Either a temporary change of character or what? Definitely there's not a permanent change of character. There's also not a permanent BOS, right? Now, let's use the word either a short change of character or a long change of character. This is what I'm trying to say in essence, right? Now, using an uptrend to cite the example, we have high, low, higher high, higher low, right? Now, don't forget, this was what? The previous high, right? Which is a resistance that was broken, that's now become our support, isn't it? Now this becomes what? Our new resistance, isn't it? So we see price, boom, break again, isn't it? We want to see price also come back to retest, possibly make a double bottom, then boom, make a double bottom, then please do not Pay attention to my drawing. Just get the lesson. Then boom, right? Now we keep seeing BOS happening. But however, we expect, or the only time we say there's a change of character in the market is when price decide to do this. Boom. Take out this previous. Now don't forget, this is what? X1, right? And this is what? X2. From this place now, from this diagram, this X2 and this is what? X1 or 1X, 2X, as the case may be. Just get the lesson. Now, the moment your first, like I illustrated in my former video, I said, when the first guy in the class always comes first, you hardly see teachers talk to him anyhow. He is not, in short, people may be making noise in the class, and when they come in, just because of him, they may pardon every other person. That is what happens with this analysis I'm trying to create here as a foundation for you to be successful as you go on with your trading, right? Now, I'm trying to say that when this first guy now, when price decide to do this, come and take out this first guy, you know, this guy coming to take out this first guy may be a new student that came in from another school, another brilliant student. So when you think you know, some persons know more than you do. So that guy came in, and this guy that's always been proud that, oh, I'm protected. Nobody can shit me from my first position. Oh, nobody can do me any harm. I'm protected. Then this guru came, right? Boom, took out this guy. You know, it will be very hard for this guy to meet up again. He may try to meet up, but this new guy that is more intelligent than this old guy that is protected will be beaten back to back. So that's what happened here. So we now saw that price came, took out the protected guy. Now let me name this. As the case may be, we said when price made this, boom, boom, we said this is what our 2x, right? Then we said this guy that always comes first in class, we call him our what? Our 1x. So this new guy now, this new guy, let's call him new guy. Let's call him new guy. The new guy came into the system, and now the new guy came into the system and decided to do a lot of harm to this first guy, and this first guy got angry. He said, let's push this guy away. But then let's take our mind a little bit off from the school analysis. Now, seeing that this support that was highly protected, being the guy that has always been coming first in class, seeing that this guy has been taken out, right? Now we expect what? A change of character. This is what we call what? Change of character. Meaning there's a new character that is setting in on this structure, or in this structure, as the case may be. So now we expect that this support broken becomes what? Our new resistance. As simple as it may be, or as simple as it is. It's very simple. Please, I need us to pay attention to this, right? Let's assume it even closed, or the gap range the new guy gave this old champion, right? The new guy gave his old champion. Let's assume the gap is very, very wide. Let's assume this guy always finishes in the class with, let's say, 90%. When this guy came, he came with 100%. Wide gap of 10. A wide gap of 10. Now, at this point, when you see the protected low broken, right? When you see the protected low broken in a downtrend, when you see the bears coming to break or to take out the protected low with a strong momentum in the market. What do I mean with strong momentum? I'm trying to say that when we have what? The candle closing this way below the support, then expect a change of character. It's as simple as that. So what are we expecting price to do right now? Now support has been broken. Support becomes what? Based on our normal anthem. When the support is broken, it becomes our new resistance. When the resistance is broken, it becomes our new support. So this guy becomes our new resistance. We have a change of character. You expect price to tap in here or tap into this zone. Now, why does price have to tap into this zone? Do not forget, if this becomes our new resistance, right? That means this place becomes what? Our first resistance protected. That means we're having one area, then we're having what? This guy becomes what? Our 2R. 2R. That means this is what? 1R. You can call it R2, is okay, in as much as you enjoying the flow and you get what you're enjoying. Just understand it. That's the basics. Understand what we're doing. Now, this R2, 2R to 1R becomes our new zone for price to what? React from. And of course, that is what we call change of character. Then we see price begin to what? Change its direction toward a downtrend. And at this point in time, you want to expect break of structure, just like we've seen here. You want to see price tap into the zone, then break of structure. So all you'll be expecting is what? BOS. Having said all of this, I want to talk about when to buy from a support and when to sell from a resistance. Very important. Very, very important. But before I begin with that, like we said earlier, you see break of structures when a market is trending, but then change of character is when there's a slight change in the market direction, probably from an uptrend to what? A downtrend. From an uptrend to a downtrend. That is when you say what? There's a change of character, meaning the character isn't having an uptrend anymore. The character of the market is not an uptrend anymore. Now the character of the market is a downtrend. So we are saying that when price moves from uptrend to downtrend, the downtrend now is the change of character, taking out the previous or the protected low, then creating also break of structure. Then you confirm that yes, this is what? A change of character. So let's look at what I said earlier. When do you buy from what? When to buy from X, from what? Support zone, and when to sell from resistance zone. Boom. Very simple. Now, when you get to the market, you get to the market and you want to buy a product, and let's assume the man's name is Mr. Wilson. When you want to buy a product from Mr. Wilson, from the seller who is Mr. Wilson, you are not going there to buy just because he calls the price. You want to buy that product exactly. Imagine you want to buy, okay, this is my remote. Imagine you want to get this remote and you want to get a remote for you already knew that this remote, right, is 5,000, and you get to the market and the man said it's 9,000. You're not just going to buy it, no matter how wealthy and rich you are. Even the rich people, they always price when they notice that they're about to be used. It's very simple. So you say, sir, I beg, how much is the last price? In as much as you are saying how much is the last price, the man would not just stick to that price. You say, okay, bring 6,000. You say, sir, will you sell it for 5,000? Now, if you are someone like me who is very smart, no matter how much that product is, right, I always have my way around knowing the exact amount. So I'll play around it, and by the time I act like I want to go, the person will just call you. I say, okay, Oga, add 500 naira. When you see the man say add 500 naira, just know that the man is willing to collect the 5k. So just tell the person, I'm willing to pay 5,000 naira. Now, at this point that you went to the market, you want to buy when price is cheap. You want to buy when that product will be offered to you at a discount price. You want to buy when price is cheap, when price is at a discount. Now, for the seller who went to the market, right? He's going to the market with a mindset of selling to make profit. As simple as that is. Meaning, if I got this for 5,000, do you expect me to sell this for 5,000? At least I should, with all of the expenses, accrued expenses, and all of that, I should be able to sell this for like maybe 7,000, right? Now, as simple as that may sound, right? That is the concept of the buyers and the sellers in the market. The buyer want to buy at discount, the seller want to sell when price is at premium. I'm also saying that most traders will know this analysis, but I'm saying that my analysis is coming based on what? Financial analysis. Just like your demand and supply, if I am correct. Now, this is the demand, and then this is the supply. At this very point of interception is called equilibrium, right? Now, you see, this point of interception is where the buyer and the seller always come to an agreement. Pay attention, please. I will show us on the chart. I will definitely show us on the chart so you get to see what I am talking about. This point of interception is what our 50% level, which is our equilibrium, that what brings an agreement between the buyers and the sellers. Now, let's look at the chart carefully. Let's look at the chart carefully. This video is getting longer, but I guess we'll follow up just to understand what we are saying. Now, we had this movement. Obviously, price was initially on a downtrend, right? Then we had a change of character. Then we saw that price created what? This, and we saw a new break of structure. Please add this to what I've said earlier. In the presence of the only thing that validates change of character is a new what? BOS. A new BOS in line with the direction of the market that has been changed into, as simple as it is, right? Now, like we said, this is protected. Let me make this accurate. And then we say this is what the new high. Now, let's name this 1x, right? We say this guy is highly protected. And then we said this guy is our 2x x2. Okay. Now, we are trying to say that this is a current high, and before price makes, please pay attention to this new line I'm using. Okay, let me at least take price backward. Let me take price backward. So going back to what I was trying to say earlier, this is what our new high, and this is what our old low. This is our protected low, and this, obviously, we are expecting to see price make a retracement, and yet we don't even know where price is supposed to come into. So that brings us to what? Our PDRA. I'll be talking about PDRA in my next video more explicitly, but for now, let's look at that point of interception we're trying to talk about. Right now, we imaginarily, we're going to mark the middle with our eyes. We're going to sight without even use the Fibonacci tool, because I don't want to introduce us to using the Fibonacci tool yet until I talk about the PDRA and point of interest. So you use your imaginary eyes, right? You use your imaginary eyes, you look at the high and the low, and you expect that price has to retrace. Now, middle, half of this and this is that equilibrium price gets to 50% level. So let me mark it. 50% level. If I am correct, this is actually the center between this and this. Now, this is our 50% level, and if you notice or you're used to your Fibonacci, your 5 level is always like that. This should be 0 and this should be what? 1. Very simple. Now, trying to sell the product that I can't buy this product at this level. No, 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 no. Of course, you could see your price line now. You can see your price line here. You could see your price line. You can see the difference between 99.898. You could see this is higher than this. So you want to see price come to a cheaper level. So anything 50 to 0 is your discount. Then you are good to go. At this point in time, you should what? Buy. So what we're saying in essence is do not buy until price comes to 50% or anything below 50% level. Using your imaginary eyes, you should buy from this level to this level when you have marked this line imaginarily. Very simple and very direct. So let's play this to see how or where price reacted on. Don't forget, this is protected. And don't forget, below this is a discount. You could still, anything above this is expensive. To be on the safe side, do not take the trade. And of course, where your stop loss ought to be is at your protected what? Support. Now, this is played and you could see what price is doing. You could see price tapped into the 50% level. You could see what price did, kept reacting around this 50%, then came to discount. Now there was an inducement that happened there, induced a lot of people based on the point of interest on the left hand side. You can see what happened. Boom, price broke the previous what? High. As simple as that is, you could see a lot of smart traders will buy at discount. So I urge you to always buy at discount, not even at equilibrium. Now that is that for an uptrend.
Subscribe.